Hello, this is Huskins, your Forex mentor. Welcome to another fantastic day in the Forex markets, your daily review for February 28th and the preview for March 1st, 2013. Your daily dose of events that shaped the Forex markets. Let's start with the thought of the day. The best thing about being a teacher is that it matters. The hardest thing about being a teacher is that it matters every day. It's my great honor and privilege to be your Forex mentor and to teach you through the Forex market. And I try my best to give you my 110% every day. Sometimes it gets difficult, but I try my best. Your daily smile. Now, this is a real incident which happened with me in Disney. Big, bold red letters in Disney. I wear glasses, and in one of these rides which I wanted to go to, I did not want to wear my glasses with me on the ride. What I did was I kept them with my wife, and I stood in line for the ride. And then, while standing in line, I came across something which appeared to be very important. It was big and in red, so I thought it was very important for me to read that. And I did not have my glasses, so what I did was I went closer and closer and closer to it to read what is it that was so important. What sign was that? And it turned out to be caution, keep away from you. So the big red sign which I should not be going towards is what attracted me, and that's what sometimes happens in the forex markets. Sometimes people look at opportunity which can come about through uh, great volatility. If you do not have a trade plan to milk that opportunity, it's going to burn you. It's going to be that big red caution sign. And luckily I did not get hurt, but it could very well happen that I could get hurt. So be wary about big red signs even in the forex markets, and if you don't have a plan, do not trade. Now, no trades for today. Now, why why is it important to have no trades? We had two fantastic news events today, the Swiss GDP as well as the US GDP, and we had no trades. The reason why we had no trades is because I did not have a trade plan for that. Primarily in part because history has shown me that these events don't act consistently. Number two is that sequestration is what's the talk of town right now. So even if things might act in a particular fashion normally, this time they may not. So it's always nice to take the day off and not trade rather than just get an itch to trade. Now, Obama and Republicans plan last minute talks on sequestration. This is the biggest news which you'd switch on TV and this is perhaps all you listen to. Now, President Barack Obama and the Republican leaders in Congress have agreed to meet on Friday to discuss a last ditch effort to avert $85 billion of spending cuts. Now, speaking to the Business Council on Wednesday, Obama offered little hope that a deal would be achieved in time. Whether that can be done in the next 2 days, I haven't seen things done in 2 days in Washington in quite some time, he said. But they're meeting tomorrow. But I just want to show you what is it that they're talking about. Now, this is not my graphic. I've borrowed this. Let's look at this particular pie. This is the 2007 federal budget. It was $2.7 trillion in spending. The 2013 federal budget is 40% larger. 40% larger. Now, this is when the last time both the GOP controlled both the houses. Now, there's one thing which is incorrect about this is that the Iraq war is not in this particular pie. This the Iraq war was not put on the credit card as yet. So the effects of expenditure during the Iraq War are felt in this budget. So do not go with the assumption that Obama caused a 40% increase in budget, but this is a fair estimate of what the pie will look like right now. And in 2007, there was a budget of 161 billion, that's 5.9%. Right now, the budget deficit is 901 billion. Now, the sequestro which they're talking about is 85 billion. You see these red crumbs out here? That's the amount they're talking about and going hoo gaga in the markets. Look at this big pie out here. No one's even talking about this big deficit. This sequestration is not going to be able to fill in this deficit gap, but perhaps that's all you're going to listen to on news. And this is going to cause a lot of volatility in the market, so just be very careful about it. And that's about it. So let's talk about other news events. We see strengthening continue in Japan's industrial sector. Japanese factories output increased 1% between December and January, according to the Ministry of Economic Trade and Industry. The minister says that the increase after a revised 2.4% improvement in December suggests that Japan's industrial slump has bottomed out. Now, you need to take whatever the ministers say with a pinch of salt. The ministers who are in the government always like to upbeat the government. Oh, the economy has turned. Oh, the slump has ended. They are forever optimists. We don't take everything verbatim. We need to internalize that, digest that, and be aware of such kind of statements. Now, another very important news. The Chinese currency yuan, for the first time in history, is bigger than the Russian ruble. Now, this is for the transactions in the global payment system, according to SWIFT, which is a Society for Worldwide Interbank Financial Telecommunication. Now, according to a recent report by SWIFT, global usage of the yuan increased 24% between December and January, and a whooping 171% from a year ago. Yesterday, I had mentioned that the Russians are looking to buy Chinese bonds, which pay about 6% interest, and with an exposure to the yuan, it might be a very good investment alternative even for the rest of us. My expectations is that if you, instead of holding US dollars, if you use a Chinese bond, you'd end up making about 8 to 10%. The 6% in the cost of bonds or the yield from the bonds, and the rest in the appreciation you'd get in the Chinese currency. Now, the yuan is a very young currency. Now, this was what the SWIFT senior business manager James Wills said. Growth has been dramatic, and this is something we expect to continue. Now, the Swiss GDP product in was better than expected in the fourth quarter of 2012. Now, Swiss real gross domestic product, that's the GDP, grew in the fourth quarter by 0.2% compared to the third quarter. Now, positive contributions to growth came primarily from private and public consumption. Gross fixed investments contributed positively but marginally to GDP growth. However, net exports of goods and services delivered a negative contribution, because when exports, you know, growth in the fourth quarter. Now, value added on the production side increased in a number of services related sectors, particularly in the areas of trade, transport, information, and communication. The delivery of financial services as well as in healthcare. So the Swiss economy is doing very well for itself. The sectors are going pretty well, and that's about it from Switzerland. Now let's look at the US economy. The US economy expands at the weakest pace since 2011. This is from Reuters. The economy barely grew in the fourth quarter as the military. Now you have to bear in mind the military slashed spending and companies restocked their shelves with less gusto. But growth already appears to be picking up. Now, if this is the way you need to look at it. If military cuts the spending and the private sector takes on the spending, that is good news. That's not bad news. The Commerce Department said on Thursday that the economy expanded at a 0.1% annual rate in the last 3 months of 2012. Now, scratching an earlier estimate that had shown a small decline. The growth rate was the slowest since the first quarter of 2011 and fell short of the 0.5% expectations. But consumer spending, while it was not stellar, it was comparatively robust, and economists see signs that signs that the factors that restrained growth late last year have already reversed in the first quarter. Now, a month ago, the government had said the economy contracted at a 0.1% pace, but in fact, it has grown at 0.1% pace. Now, we'll have the last number, next month, which will be the final number. Now, a preview for tomorrow. A preview is that we'll have the UK manufacturing PMI. The trade plans of this is already discussed and are available for our members. That's at 4:30 a.m. And we're going to also have the US ISM manufacturing PMI. Now, the deal with this is that I'm not going to be trading the US ISM manufacturing PMI at 10, but I will be trading the UK manufacturing PMI at 4:30. The reason I won't be trading the 10 o'clock news is one word: sequestration. I'm not going to be trading when there are talking heads talking about the budgets and the market's going to be crazy. I think we can pull a fast one through UK's manufacturing PMI. Thank you so much for watching this video. Have a great day. Bye for now.